Hey everyone, welcome back to Compound Thesis, where we discuss the intersection of crypto and the capital markets. I'm Jim, I'm the head of sales at Compound, and our guest today, super excited to be joined by Luke Froehlich. He's the global head of digital asset solutions at Fidelity. Fidelity is one of the most recognizable brands in asset management and finance, but Luke leads up their global digital asset solutions team, and really excited to have you on the show. Welcome.
Hey, hi, Jim. Good to see you.
Good to see you as well. So, I mean, you're looking at your background, super impressive. I mean, you've been multiple investment banks, the World Economic Forum, you've been a fixed income credit PM. But what made you interested in the crypto space as you switched into this current role?
Well, look, I was simply fascinated by the potential application of distributed ledger technology. Let's call it just blockchain. The idea of being able to design investment solution that suits the need of particular client. The idea also to shake up institution, right, and to force them to continue innovating for the benefit of consumer. Now, to be fair, it took me a few years to realize the potential of blockchain. When I started buying Bitcoin back in 2015, I had no appreciation for that potential. It's only when I started advising fintech in the crypto space, working on white paper with the World Economic Forum, that's when I had my epiphany that digital asset could transform how we do business.
Yeah, so I mean, it sounds like you've obviously been in this space for quite some time. You've seen a lot of the innovation. I guess, as it relates to financial services or asset management, like, how is Fidelity looking at applying digital asset solutions, or how are you advising or challenging the status quo for yourself, or your internal stakeholders, external stakeholders in, adopting this technology to, as you say, revolutionize financial services?
Yeah, so we look at two different buckets, I would say. The first one is to look at digital asset as an asset class, where we design investment solutions that allow our client to get access to digital assets. The other line of business is more focused on the infrastructure. So how do we upgrade our internal infrastructure? So for instance, we can onboard stablecoin or CBDCs, and also starting on the tokenization aspect. So be it the onboarding of tokenized assets or the distribution of our fund in a tokenized format. So those are the two areas. We've been very much focused on, I would say, the two extreme, launching some products that are focused on cryptocurrencies, but at the same time also experimenting with the distribution of funds in a tokenized format. So a bit of a barbell strategy.
So if we could pull a little bit further on both of those different ends of the spectrum. So I guess on the investment side, as you guys are looking at building different investment strategies, could you kind of talk through, how you're evaluating different projects, different tokens, or, just what your general like investment framework looks like to constructing a portfolio, or identifying different assets that you think investors should be adding to their portfolios?
Yeah, so I would say first that we don't advise clients to invest in particular type of asset, and we don't tell them how much they should have of that asset. What we provide is an access. So typically the client that I'm facing that are professional investor, they have some idea of where they want to be positioned. They have some background in the token that they are interested in. So what we started doing was to provide this access product. Ultimately, what we wanted to do is to provide the investor with a secure and convenient way to access part of the cryptocurrency space. Now, there are other line of product or a generation of product that we're working on, which is looking at also, besides providing a directional bet, also generating some income. So it could be via lending, it could be via staking, maybe in the future some liquidity pool. So those are all options that we are exploring at the moment.
Interesting. And then on the distribution side, I mean, we've seen, a couple of funds like Apollo, KKR, and others like using the tokenization or tokenizing funds to provide access and distribution on those rails. Could you talk a little bit more about what Fidelity is doing in that space as well?
Yeah, so it's a pretty exciting space. The distribution of fund in a tokenized format is one aspect, but it's only one aspect. I'll touch also a little bit more on the onboarding of tokenized assets. So in terms of the distribution, so as you mentioned, there is this ability to potentially access group of investor that we could not access in the future, or maybe you will have also the next generation of investor who simply want to have a Fidelity fund included in their wallet. So there is this aspect there. There is also the research of efficiency, right? We want to be able to package and distribute investment solution at the most lower cost so that we can pass on to the client. With regard to the onboarding of tokenized assets, I think this is also another exciting space. It's no secret there's been quite a few investment banks this year, which have been looking at tokenizing assets. Now, for all the great discussion that we've had about tokenizing intellectual property rights and all this good stuff, we are actually very much at the basics, right? We're just about to tokenize a bond and figure out how it works. So that's another important aspect. The technology ultimately is similar between the two, but I think they are two very different use cases. Just the last aspect, besides the ability of accessing a different group of investors, there is obviously on the private asset quite a strong interest to look at tokenization. So Fidelity covers equity, fixed income, multi-asset, real estate, and we're also a pretty exciting offering building in the private asset space. Now, as you would appreciate, there is quite a challenge in breaking down the size of those deals. So the idea of being able to tokenize and fractionalize is also a way potentially to make this type of investment more accessible to investor. There is one thing that still needs to be clarified, right? Is the suitability, because you can tokenize a Picasso or a solar power plant doesn't mean that this investment is going to be suitable in every type of portfolio.
Sure, absolutely. Yeah, I mean, providing access certainly is creating much more opportunities, but doesn't necessarily mean that it makes sense to put into every portfolio, especially depending on what the strategy of the particular fund is, or for the investor that's looking to diversify. Having a Picasso in their portfolio, if you're a retail investor, may or may not be the best investment. So as you look at just like the value chain of creation of assets and settlement all the way through end to end, can you talk a little bit about how you envision like blockchain leveraging this technology to increase efficiency, security, and any other aspects that you think are just kind of changing the overall workflow of like middle and back office as well?
Look, there are many areas where blockchain could streamline the processes, free up capital, like simplifying trade settlement or reducing the needs for derivative collateral. But I think those are just examples of substituting one tech stack for another one. So it's not that exciting. I think what is more exciting when you start using at blockchain to do things that you were not able to do before this technology was there. So to give you a few examples, for instance, I'm looking at decentralized autonomous organization to coordinate internal resources within the company, or even to design investment solution. We are exploring smart contracts as a vehicle for our investment solution, potentially delivering more transparency or composability. So those are, I think, areas that are a little bit more exciting, because not just doing the same with a different technology, is actually pushing the boundary and starting to develop solutions that were not possible before. I think this is where the focus should be.
Yeah, I mean, the composability of this technology kind of gives all the building blocks to create different solutions, and not just to, as you mentioned, like replace the functions that have already existed, but to build new infrastructure and new opportunities, based off of the different building blocks that are now available through this tech.
Yeah, and if you don't mind jumping in, it's
Please.
there is especially this year, there's been a lot of discussion of whether or not the technology makes sense or doesn't make sense, and people tend to focus on the things that haven't been so far and haven't necessarily worked. And my point is that, okay, you're just looking at how this technology has been just replacing existing tech stack, but we're just at the beginning. Again, I think the focus is more about doing things that we haven't been able to do before, and there we are fairly early on.
Sure. Yeah, I mean, November's just been this year has been a very crazy year for the entire space, but this last 30 days or so have been particularly challenging. Like as you look at the inertia that you've built at Fidelity, how are the events that have transpired affected, your strategy or the momentum that you're building in terms of pushing forward? Is it disruptive to a large extent, or how is, what's the house view in terms of continuing this path forward?
Yeah, look, the past few months or the full year, to be fair, has been pretty challenging. And I think we're still seeing the aftershock of some bankruptcy still rocketing the market. Plus, there is a lot of media pressure, whereas sometimes seems to be a bit of confusion between the behavior of bad actor and what is actually a sound technology. But I think we're slowly moving toward the next phase. And I think that could be a big catalyst for digital assets. Because you would have most of the weak or bad actor that would have been wiped away. You have the regulator stepping in. Now, I appreciate that is not everybody stays to have more regulatory pressure in this space, but to be fair, to be able to participate, institutional investor would need some guardrail. So you have the bad actor, the regulator stepping in, and most institutions have also raised their level of understanding, right? It's like they got a second chance to level up their skill because they know that blockchain is here to stay.
Yeah, absolutely. And the even yesterday in the Wall Street Journal, David Solomon, the CEO of Goldman, put out an opinion piece that the technology is still here to stay, regardless of some of the events that have taken place in the industry. So I guess if you look at different regional, because you have a very global seat and you're constantly interacting with folks all across the globe. Can you talk through any like particular geographic or different industry differences that you see that are moving forward in digital assets? Like, are you seeing any like regional, like APAC versus US versus Europe, in terms of adoption of this technology?
Yeah, so there are some regional disparities, right? If I had to go at a very high level, there are a lot of infighting still in the US, a lot of discussion in Europe, and I would say more activity happening in Asia, especially between the central bank and in the space of CBDCs. But I think what ultimately matters, especially for the adoption of digital assets, is the regulatory framework. And I think that's why Switzerland and Singapore are on everybody's lips as a top it's a tier one regulator. That's why the UAE has managed to attract a lot of talent. That's also why the world is watching Hong Kong, where I'm based, as we move toward legalizing crypto for retail investors. In terms of the segments, look, I think it's probably more toward the small professional investor, like family offices. This is where I'm seeing the most appetite. They are not necessarily the most advanced, or they don't necessarily have the most exotic portfolio, but they have been through a few cycles. And I think that's critical. In terms of the services, the interest, where we see the interest, we're slowly moving beyond custody. So it's still the ground zero of anything, any infrastructure that you need to build. But we start more focusing on analytics. So how to do proper risk and performance measurement. And on the back of that, we're also increasingly moving toward execution platform. So the ability of managing your assets.
Sure. You touched on analytics there. I mean, one of the beauties of blockchain technology is just the public or the transparency of transactions and positions that exist, and that's one of the core tenets of DeFi is that lack of opacity. And so the tools I would imagine that you have at your fingertips allow you to see flows and give you insights that you're distilling to help with your investors, helping advise to how to deploy assets and whatnot. So I'm just curious, if you look at the different tools that you have at your fingertips, like how are you leveraging the open architecture of blockchain to inform some of the decisions that you're making in terms of looking at the analytics that are publicly available?
Yeah. So look, we look at this aspect, but it's more in the background for now, because the focus is more about designing solutions that provide access. So that's where the focus is. And to be fair, all the information that you can capture, all the technology that you can put around this is great, but it's to some extent the easy part. The hardest part is actually to identify who can do what and where. Right? We are a highly regulated business. We're not going to go in area which are gray. That's why I keep on saying is that, look, like it or not, the fact that we have a bit of more regulatory clarity coming up is helping us to shape the strategy. Now, as we shape the strategy, increasingly we will need to develop a toolkit that we make available to our investors. So moving from developing investment solution to having a more broad-based offering in terms of services. The focus has very much been on the educational side. Like for the past 18 months, this is like one of the key aspects of the client engagement. But increasingly, there is interest from our investor, from our client, from prospective clients, stakeholder, generally speaking, to have more of research content. So not necessarily for us to tell them, oh, you should buy this token at this price, but simply to provide a factual view of what the space is. Because one of the challenge that people realize now is that a few months ago, we used to have like thousands and thousands of small asset manager, some of them very smart, sophisticated, but a lot of them didn't have any experience in investing or in risk management. So that's also one of the reasons why people are looking at us and say, okay, can you guys help? We know that your bread and butter is research. So can you help us get a sense of where the universe is, how to break it down? So we've done some work, for instance, in starting with the taxonomy. It sounds ridiculous because it's so simple, but the fact that we don't have a common language when we talk about specific token is a challenge, right? And it's not just from a regulatory point of view to say, okay, this is going to do in this bucket, but I look at it more from an investment point of view. I need to be able to make a difference between a cryptocurrency and a utility token or NFT, because the risk profile is going to be different.
Yeah, and so when you look at the different categories that you just highlighted there, like a utility token versus a cryptocurrency versus a governance token, for example, a lot of the information that's available, buried in forums, and it's deep within the discords or on Twitter. How do you go about kind of distilling that information for investors? Do you have your finger on the pulse for all of the for a DAO, for example? Are you constantly staying on top of the latest forum posts and all the engagement that's happening kind of on those types of social channels, or are you guys going deep into the white papers? Like, how do you go about that research process to distill the information to kind of go back to your investors and give them the insights that they so desperately need?
So I would separate the investment solution part, like the product that we put together, and our innovation segment. Again, because we don't tell investor, okay, you should be investing in that and have so much of it. This is like another segment. We don't necessarily need to have like huge team that look at on-chain data, what is happening in a different forum. But this is a segment that we look within our innovation team. So we've done a lot of research in looking at NFTs and how they could be using way beyond the point of collectible. That's, I think it's partly missing the point, but how can you use NFT, for instance, as decentralized databases. So that's an area which is more on the research side, but the focus is more on establishing the infrastructure. So then when you think that it's a safe place, when there are some rail from a regulatory point of view, and when there are a clear client interests that have been identified, so that we are ready to implement all this research part and put it into an investment solution.
And so on that, distribution or tokenization, as institutions are looking at their, historically in every other asset class, a lot of KYC and identity, all the compliance aspects of actually participating in a particular asset class. How is that different, or are you seeing any innovation in the digital asset space that's allowing institutions to get comfortable with that type of former like legacy comfort that folks get around in participating in other asset classes, specifically as it relates to like KYC and whatnot?
That's I think that's one of the biggest challenge, right? But generally speaking, especially like in the space of decentralized finances, how do we approach this space? So there are some fairly easy way to tackle the issue when it comes to the KYC or AML, looking at different wallets that could be touching our own wallets. But I think the more challenging part is how do we reconcile the idea that there is not one single person that we can point out, or even an entity. For instance, if we use a protocol and something goes wrong, how can we change the way we do risk management? How do we assess risk? And that's, I mean, I appreciate other entities like regulator have a big issue on figuring out how to do. So I don't think that we have found a golden solution to tackle this issue, in particular when it comes to decentralized entities.
Sure, absolutely. Yeah, no, I know and there's a lot of collaboration, as you mentioned earlier, like Project Guardian, for example. There is regulatory or central bank participation in the space. And so hopefully that collaboration continues and these solutions continue to be surfaced, as the challenges are certainly there for, unlocking more adoption.
Yeah, I mean, the aspect of collaboration, that's a tricky one, right? If you think of blockchain technology, ultimately to be able to extract as much as possible out of it, you need a lot of cooperation between partners, you need a lot of transparency, and you kind of need to start disintermediating yourself, right? Because the focus should be on the client and not in the institution. So those are three things that don't necessarily come very naturally to traditional finance. Now, on the positive side, what I'm observing is that there is more collaboration when it comes to digital assets, right? At this stage, we're still more in a community building phase instead of a harsh competition. And there is also typically more openness when it comes to discussing ideas. Firstly, because frankly, there are only a few people with whom you can have deep discussion. I'm talking about TradFi. And we also tend to have a similar view about how we could be implementing this technology. And we all face the same challenges, right? Because working with large organizations where you need to manage quite a few stakeholders.
Yeah, no, absolutely. It's not just a front office. I mean, as you mentioned earlier, risk and compliance is, there's a lot of different funds and investors or participants that haven't necessarily made that a top priority, but certainly that is going to be required on a go-forward basis to make sure that this is a sustainable business and market on a go-forward. Well, we covered a lot of ground there, Luke. I would love to, kind of close out with any additional thoughts that you might have before we let you go.
Look, my message for those, especially like the institutional investor who haven't really started learning or exploring the space, digital asset generally speaking, is that it's now is the time. It's the time to learn if you haven't started, or to build if you already have started. I think there has been a lot of doomsayers and people who talk about things that they don't necessarily fully appreciate. But I think that we just got started with blockchain and digital asset, and we have a long and bright journey ahead of us. So I would hope that people spend their energy more in the learning part, so identifying also how blockchain technology can be used in a positive way. That's my first message. The second message is that I would also acknowledge that it's been a pretty challenging year for all of us working in digital asset. I mean, I've lost money. I've had my doubt at times, but I've been also through other bear markets, and each of them is mentally challenged. The best thing that we could do is put your head down, work, and wait for the next rally.
Yeah, no, I love the optimistic tone and couldn't agree with you more. From a lot of the client conversations that we have, there's definitely a general pause in the market. Obviously, everybody's exhausted from the events over the last 11 months. And, there's a lot of work to be done in order to harden the systems and to, continue to develop this ecosystem. But, as the capital and the energy and the innovation will continue in this space, it's just a matter of continuing to understand where there are, gaps and where there are hidden risks, and to continue to service those and push them out of the system so that we can continue to execute and complete the mission that we started. But we are definitely, this is not the first time that this industry has gone through this type of an environment, and it most likely won't be the last, but hopefully we continue to mitigate risks as we go forward and kind of clean things up. But I really appreciate the time, Luke. I know we covered a lot of ground there, so we'll have to do this again sometime, but appreciate it, and we'll have you back soon. Thanks again, everybody, for tuning in, and we'll have you back on Compound Thesis in a couple weeks.
Thanks, Jim. Bye, guys.
Thanks.